So today, we will be looking at pre-NFP moves. This week has been very interesting. We had the FOMC statement delivered on Wednesday. We've had some really a lot of volatility later on the week, especially yesterday. There were a number of great trades set up. So I'll run through some of those with you today. And we can see certainly the market is looking very interesting ahead of non-farm payroll today. So the gold prices has fallen this week as the FOMC tapered by a further 10 billion per month. Gold price continued to fall on Thursday after the US Federal Reserve. They decided to taper its monthly asset purchases by 10 billion to 45 per month. Gold prices fell 1.02% to $1,282 an ounce on the close of the US trading session on Thursday, while silver price followed suit, declined 0.96% to settle at 18.99 an ounce. Gold remains under pressure as recently tensions in Russia and Ukraine also begin to ease. In recent weeks, the intensifying tension in the region boosted gold's safe haven allure. Having said that, it is very unclear whether this tension between Russia and Ukraine will be fully resolved. And for that reason, gold will still be the biggest beneficiary. So if the situation worsens, gold will be back above 1,300 US dollars an ounce very fast. So we saw actually last week some tension escalated in Ukraine and Russia, and within about an hour or two we saw gold move 300 points to the upside, a huge spike to the upside. So we know this fundamental news coming out of Russia and Ukraine can certainly have a big impact. It's something to watch out for. Just be careful when you're trading with your stops. Make sure you account for that. Today, traders will of course focus on the US labor market. Non-farm payroll data scheduled for release today at 1:30 p.m. BST, 8:30 a.m. EDT. It's one of the most, one of the main indicators, one of the most high impact announcements that we see, describes the health of the US economy. The non-farm payroll figures released today is expected to post 210,000 new jobs filled in April compared with a previous month reading of 192,000. So regardless of the outcome, the report is likely to create volatility, presenting traders with highly lucrative trading opportunities across the market. So it's going to be a very volatile day, and there's potentially some big trading opportunities today as well. So before we go into the technicals, I'm Phil Carr, professional trainer and speaker. It's a pleasure to be here. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kalsi, professional trader, investment analyst and speaker. Began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top tier hedge funds and investment banks. Through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial TV. So that's a bit of background on the Gold and Silver Club. We'll look at the gold price at the moment, currently trading at 1,285 US dollars an ounce. So it's looking quite interesting where gold is sitting just prior to non-farm payroll. We'll take a look at that. The top trade of the week using the Gold and Silver Club signature trading strategies this week. We had a very quick trade yesterday on Brent crude oil. We broke down, broke past a major Fibonacci level, a level of support as well, some key moving averages and a trend line. And on that, we had a nice 120-point gain. The risk on that was 40 points, 400 US dollars risk for each lot traded for a 120-point gain, 1,200 US dollars profit on the trade for a 3-to-1 on that very quickly yesterday, got a nice move lower. And we've seen some interesting moves to the upside today as we see oil starting to get a little bit of support prior to non-farm payroll. So with that, we'll take a look at some live market analysis. Just going to switch you onto my charts here. Okay, we'll start off with the US dollar index. So the US dollar index, based on the announcements that came out from the Federal Reserve of additional tapering, we certainly expected the US dollar to gain some strength from that. We had reached a bottom at 79.48. We've seen just down here, we are finding some support, nice little hammer, which formed yesterday. That's been We've seen that break out to the upside today. I would expect the next level of resistance here to be 79.70 for the US dollar. That's the key level that we're looking at. You've also you've got some key moving averages just at that level as well. So that's the next level of resistance, 79.70. Now, if the news today, which breaks from the non-farm payroll, is supportive for the US dollar and the US economy, we would expect to see the US dollar rise and therefore gold sell off. So we are a bit overextended on this sell off at the moment, considering that we're getting additional tapering. We would expect a little bit more strength on the US dollar here. So we'll see how the news breaks this afternoon. If it is weak for the US dollar and we see poor employment numbers come out and we see a reversal, I'll be looking to take out 79.50 for the low on the US dollar index, come down to 79.38. And ultimately, if we can take that level out, we would see a breakout to the upside on gold and a nice sell short here on the US dollar. So US dollar is going to be a very key market to watch ahead of non-farm payroll today. Now, if we take a look at gold, gold's been quite interesting. We are in a downward trend on gold just in the short term. You can see very clearly, just put some very simple trend lines on this market. And we've got a nice little downward trend that we're starting to form here on gold. We could just touch a few more lows perhaps here. So in a clear downward trend, it's in between those levels at the moment. Found a little bit of support yesterday at 12.76. We did have an opportunity to short yesterday, caught about 120 pips for a sell short on the downside here for gold. So gold's really where it's sitting in between some key levels at the moment. I'd like to see either for a short, take out 12.75 for gold, get a nice move lower. If we really want to build up some momentum to the upside, we really need to break above 13.06 on gold, which I'll show you on the daily. So we need a nice solid move above 13.06, or we need to take out the legs here at 12.76 for a sell short. We are in a downward trend. We're below some key moving averages like the 200-day moving average. We are in a bearish mode at the moment in the short term for gold, but it's finding a little bit of support at that key level 12.76. And of course, we need to see what the non-farm payroll data is going to do. May, they do say sell in May and go away. May is generally speaking a bearish month for the metals. We do tend to have more weakness in May as opposed to some of the other months. So I'm not necessarily looking for a huge breakout on gold today. However, there is still that safe haven bid in the background with the Russia and Ukraine, which we need to watch out for and just be a bit more nimble with our gold trades in and out, not expecting too much in terms of a swing trade on these, just very quickly in and out on these day trades. Gold average volatility every day is about 200 points on this market. So you can easily get some really good profits day trading gold as we do. Moving on, we'll have a look at the other metals. I really like this move that we're getting at the moment on the, we can see here just on the copper market, you can see we actually triggered into trade yesterday. That's moving quite nicely. We did get a bit of an overextended sell-off on the copper market. Let me just remove this risk to reward tool. So you can have a look and we can see that we're still staying with an upward trending channel. Again, just draw a very simple trend line, the low, bounce. We can see we're still working towards potential building a low here, and this third bounce is really quite a nice entry point. Bit of a extreme sell-off here over the course of the Federal Reserve, and just after that as well, Federal Reserve announcement, we saw copper pull back. So it's been a quite nice entry. I want to see if it's going to break out to the upside today, or whether we're going to get a reversal, come back and retest 3.00. But I do like this copper trade. Looks pretty good at the moment. Moving over to silver, can just drag that down ever slightly. Silver at the moment, we'll take a look at the weekly. It's looking, it's lower lows, lower highs. It's looking bearish still. Silver just continuing to really churn lower here. You can draw some trend lines on that as well, just to see where. I'll just draw one for you just so you can have a look. So we're just staying within fairly clear downward trending channel here on the silver market. I'd say it's more lucrative at the moment to be trading gold and copper right now if you're going to pick the metals. But we are seeing a low put in yesterday, 18.81. We'll see if that gets triggered to the upside today, or if we can take out the lows on NFP. But for me, I'd rather play the copper moves and the gold moves just this week at the moment. If we move across to, we'll just take a look at, we'll take a look at the energies. We'll start off with Brent. Brent crude oil's had a nice move today. We came down yesterday to the 106.89. We had a nice short on that, came down, hit our profit target, found support, this key Fibonacci level. You can see the market produced a hammer yesterday. That's had a nice move to the upside today, hovering around a Fibonacci level at the moment. There's been some really decent trades on the tighter time frame here. If you go into the 4-hour time frame, for example, at the moment we do have we're right in between some major levels here at the moment on the Brent market. Just see how the weekly's closing at the moment. It's pretty bearish. Have been bearish on the week. Actually, just updated that, and you can see there's a bit of a hammer forming on the weekly, and we have got to close back above a major trend line. So I'll be monitoring Brent today. I want to see if we're going to get a further breakout and come back up and retest 109.45, 110. We have already had a trade trigger on that earlier on today. If we go over to WTI, sold off also yesterday. You can see a lot of moving averages consolidating, clustering here, which is going to put a bit of pressure here on the WTI crude oil, the light sweet crude oil market. We can see at the moment that we did get a nice sell-off yesterday, getting a bit of a bounce ahead of non-farm payroll. We may just come up and test this level here, these key moving averages at 100, round about the 150 level, and get another reversal and a move down lower. We are in a downward trend at the moment, short-term downward trend on WTI. Take a look at natural gas. Natural gas been looking quite interesting. The inventories yesterday came in and delivered a sell short yesterday for natural gas. We are still working our way out of a V-shaped reversal pattern here. We're finding some support at the lower end of this trend line. We're looking, so it's like a triangle pattern, and we're looking to break out from 4.842 for a nice solid move higher here. Or if we break the trend line, come down, retest the 50-day moving average, come down to about 4.560. That's what we're looking at for natural gas for the time being. So that's really what the energies are doing right now. Wheat has had some great moves on wheat, shorted. We've been long, short, lots of day trades opportunities on wheat. Broke through a trend line yesterday, came down. If we go onto the weekly for wheat, we did actually close the week pretty bullish. We've also closed the month very bullish as well for wheat. So I would expect a lot of pressure around the 72,156 level, because this is where this level just up here. This is where if we get a breakout, we'll be breaking 2014 highs. Got a very strong upward trend here at the moment. I'm just looking for a nice solid move and breakout above 723, more of a swing trade opportunity, but that looks really nice here for wheat at the moment. You can see a little bit of a sort of W-shaped pattern forming here as well on the wheat market. Oh, let me just quickly show you that. This is a little bit tricky to do with the tools here, but you can more or less make it out. Okay, so there's your W-shaped pattern, and that's where we're looking to get a breakout from the 723.39 level. So very clear. So support, resistance, bang, looking for a breakout. So that's the wheat market. It looks pretty good there for a breakout if we can get above that level. We've had some nice moves here. We continue to consolidate a little bit here on the coffee market. If we look at the weekly, we're looking interesting. Another doji forming on the weekly, still working its way out to higher highs. A little bit of decision making to be made here. Still in a very clear upward trend. I mean, coffee's had a fantastic year so far this year. We're still staying. We're consolidating. We've not had too much of a pullback from its highs here. Looking for a move really above 216 to break out to new highs. Again, really nice for a nice swing, solid swing trades here on the coffee market. But do keep an eye on that key level 216 for a nice breakout. We'll see how if we get any nice moves during the announcement of the FOMC. Also, Australian US dollar, that's delivered some good pips short from yesterday. Actually, we still remain short this. Just we've got that correlation with the correlation with the gold market. We tend to see Australian US dollar is quite strongly correlated with gold. US dollar index picking up momentum today. Australian US dollar is selling off today and looking really for it to come down to 0.92271. We'll see how this fares. It's often a big mover during the non-farm payroll, Australian US dollar, and it'll be quite strongly correlated to gold. So I would say the main markets we want to be really looking out for today, US dollar index, of course, that will get a big move on non-farm payroll. We want to see if we're going to get a spike to the upside or a sell short. Of course, do watch the gold market. Want to see which way we're going to break on here. If we're going to get a breakout, come and test resistance and sell off or a break below 12.76. Copper, definitely one to watch. It's on the move this morning. Do watch copper. I think that's going to be quite a tasty a trade today. And also do keep an eye on Australian US dollar as well, with a correlation with gold. You know, the other energies, the energies which are at some key levels. Be keeping an eye particularly on natural gas today as well, which does tend to move on non-farm payroll. So with that, we'll take a look at the 6 major announcements as we go into the week ahead here. Just bring back my presentation and we'll go over those for you. Okay, so the week ahead, the 6 major events looking forward, we'll take a look at. Okay, so the week ahead, we've got key events looking forward. Of course, today we've got 1:30 p.m. BST, US non-farm payrolls. That measures the change in the number of people employed during the previous month, excluding the farming industry. Job creation is, of course, the foremost indicator of consumer spending. It accounts for the majority of economic activity. Higher than expected readings should be taken as bullish for the US dollar, which would be bearish for gold, or lower than expected readings should be taken as bearish for the US dollar, which will be bullish for gold. And that's 8:30 a.m. Eastern Time, 1:30 p.m. today, BST, London time. So Monday, the 5th of May next week, we have the US ISM manufacturing. That's at 3 p.m. BST, 10 a.m. Eastern Time. The Institute of Supply Management, the ISM Non-Manufacturing Purchasing Managers Index, PMI, reports on the overall economic conditions of the non-manufacturing sector, including business activity, new orders, employment and supply deliveries. So higher than expected readings should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Next Wednesday, 7th of May, 3:30 p.m. BST, 10:30 a.m. Eastern Time, we have US crude oil inventories. That data reports the number of barrels of crude oil commercial firms have in inventory. Commercial firms report those inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil. A lower than expected reading should be taken really as bullish for crude oil. That's what we normally see, that really nice correlation. Next Thursday, 8th of May, 3 a.m. BST, 10:30 p.m. Eastern Time. We've got the Chinese trade balance. That data measures the difference in value between imported and exported goods over the reported period. So a positive number indicates that goods and services were exported, that more goods and services were exported than imported. China is a big buyer of gold, silver, copper, oil, so a stronger than expected number should be taken as positive for the metals and energies, and a lower than expected number as negative. Next Thursday, the 8th of May, 3:30 p.m. BST, 10:30 a.m. Eastern Time, we have the US natural gas storage. So the Energy Information Administration, the EIA, natural gas storage report measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So whilst it is a US indicator, it tends to have a greater impact on the CAD due to Canada's sizable energy sector, and it's important because the CAD is, of course, correlated to oil price. And then Friday, 9th of May, we have the Chinese PMI, 2:30 a.m. BST, 9:30 p.m. Eastern Time. That measures the change in the price of goods and services from the perspective of the consumer. So it's a key way to measure purchasing trends and inflation. China is a big buyer of gold, silver, copper, and oil. A stronger than expected number should be taken as positive for the metals and energies, and a lower than expected number should be taken as negative. So that will definitely have a big impact next Friday as well. So those are really the key 6 announcements you want to be watching out for your trading over the next week. Of course, if you'd like to really take your trading to the next level, you can find out more about our upcoming Gold and Silver Club Masterclass workshops, about our live trading room and future programs that we have running, and join our international community of traders. You can request more information, either our London office, our New York office, our Budapest office, our Johannesburg office, numbers on the screen. Just drop us an email if you want as well, office@thegoldensilverclub.com, or go to www.jointhegoldensilverclub.com to request information on our upcoming programs. So just keep those on the screen for you there. And make sure you subscribe to our newsletter. You will receive free weekly gold, silver, oil, natural gas, commodity currency news, live market analysis, and prices. So do make sure you take advantage of that and subscribe via our website. Okay, so that's a wrap for today, everyone. So we have got non-farm payroll, which is going to be occurring in the next 2 hours. So look forward to that. It's going to be a good trading opportunity. Thanks for FX Street and the team for putting on today's webinar. And we wish you all good luck with your trading, and we'll catch you back here same time next week, guys. So have a great weekend, and we'll see you on the next one. Cheers, everybody. Bye-bye.